Next topic, annual allowance of pension. Annual allowance of pension mean it's a pension relief. What is the meaning of annual allowance? It's a pension relief. So there are different points in this topic. Firstly, I will read only, but through the question, I will tell you whole thing. What is the meaning of annual allowance? So I am reading only these points. Then we will apply through the question. So first point, annual allowance for the tax year 2021 is £40,000. So for your this tax year, what is your annual allowance? 40,000.
40,000.
And second point, from 14-15 tax year onwards, it is 40. And for previous years, it was 50,000. Mean up to 13-14 tax year, it was 50,000. But when 14-15 start, it will be 40, and onwards now it is 40,000. So from 14-15 onwards, it is 40,000, and up to 13-14, it was £50,000. Third point, a person can get annual allowance. AA mean annual allowance if he is a member of a registered pension plan. Registered pension plan mean same occupational or personal pension plans. So if you are a member of registered pension plan, then you can get the annual allowance. Okay. This 40 or 50 you can get. For example, in 14-15 tax year, if you are not a member of registered pension plan, can you get 40,000 annual allowance in that year?
No.
No, zero annual allowance in that year you will get. Okay, next fourth point. Unused annual allowance can be carried forward for 3 years on FIFO basis. Mean, for example, your tax year is 2021. 40,000 full annual allowance you will get, plus last 3 years unused annual allowance you can get on FIFO basis. First in, first out. Mean, firstly, if you go back 3 years, what is the first year? 18, 19?
18, 19.
17, 18, I think.
No, 17, 18.
Yes. So in 17, 18, what is the annual allowance?
40,000.
40. Second year is 18, 19. What is annual allowance? 40.
40,000.
And third year is 19, 20. What is annual allowance? 40. So
40,000.
these 3, 40, 40 plus 20, 21, 44. So all these 40,000, 4 times 40,000 is equal to 1,60,000. So maximum in 2020-21, how much annual allowance you can get? 1,60,000 maximum.
Yes.
So mean in 2021, your own 40 for this year plus previous 3 years. So in 2021, maximum 160,000 you can get. Last point. Second last point. Annual allowance apply on following pension contributions: employer contribution in OPP, employee contribution in OPP, employer contribution in PPC, and individual gross contribution in PPC. Mean gross figure always you will take of PPC, individual PPC, from which you will increase the basic and higher bands. So from all these contributions, they will apply on annual allowance. Mean all these pensions you will deduct from your annual allowance from here. All four, mean employer and employee contribution in OPP and PPC, both. All four contribution you will deduct. For example, all four contributions equal to 1,80,000. All these pensions are equal to 180,000. So from annual allowance 160, when you deduct 180 pensions, what is the answer?
0. It will be negative.
Take the reference. 160 minus
20,000. It
What
will
is
160 minus 180 to be negative.
No problem. What is the answer?
20,000.
Is it excess pension or excess annual allowance?
Excess pension.
Yes. If excess pension contribution, how much? 20,000. If excess pension contribution arise, then it is considered your non-saving income, and you will apply the non-saving rates and pay the income tax on it. So it's your non-saving income, okay? And you will pay the income tax on it. Got my point?
Yes, ma'am.
And if this 20,000 is excess annual allowance, for example, this is excess annual allowance, then it will be carried forward to next year, mean 21, 22, and you will add in 40,000, 2021 annual allowance 40,000. So add this 20,000 carried forward annual allowance in this 40,000. Okay. So this
Yes,
annual
ma'am.
allowance, unused annual allowance, will be carried forward to the next year, and you will add this figure in the annual allowance in that year. But if it's a pension, excess pension, then it will be your non-saving income and you will pay income tax on it. These 2 points clear?
Yes, ma'am.
Okay. So last point is same, I am reading. If contribution in pension is more than annual allowance, in our example 20,000 more, then you will have excess pension contribution, mean 20,000. And this excess pension contribution will be considered as non-saving income at the end. Done?
Yes, ma'am.
Okay. Now next point, tapered or reduced annual allowance. Taper mean annual allowance could be reduced. Normal, 40,000 in 2021 you will get. So normally the annual allowance is 40,000 for tax year 2021. I mean, this tax year annual allowance is 40 normal. But it can be reduced, it can be tapered. So you can see the, for example, you can see here, 2021 40,000 plus previous 3 years you can get annual allowance. So my question here is this 40, whether full 40 in 2021 you will get, or it can be tapered or reduced. So that is the question now. Okay.
Yes, ma'am.
So in your notes, there is a picture diagram. I am reading this one. To check whether it is reduced or not, you will see this sketch. First, you will check your ANI. And I mean threshold income. Examiner can also use the word threshold income for ANI. Adjusted net income is also called threshold income. So if your ANI or threshold income on the left side, firstly see the left side arrow. If your ANI is less than equal to 200,000, then full 40,000 pound annual allowance you will get for the tax year 2021. I am talking about 2021 specifically for this tax year, okay? So if your ANI is less than equal to 2 lakh, then full 40,000 you will get. It will not be tapered, okay? But on the right side,
yes, ma'am.
On the right side, if your ANI is more than 2 lakh, then you will think about reducing that annual allowance, tapering the annual allowance. So if your ANI is more than 2 lakh, then you will check the adjusted income also and then decide how much annual allowance you will get. Firstly, you will check the adjusted net income. If more than 2 lakh, then check adjusted income. And in adjusted income, number 1 point, if your adjusted income is up to 2 lakh 40,000, up till 2 lakh 40,000, then full 40,000 annual allowance available for the tax year 2021. And number 2, if your adjusted income more than 2 lakh 40,000 but less than 312,000, then you will follow the 3 steps and then you can find the annual allowance. So before going to steps, you can see example. For example, adjusted income is 2,60,000. 260 mean more than 240 but less than 312. Now step 1, calculate excess above 240,000. Tell me what is more than excess above 240 in our example.
20,000.
Yes. Step 2, make the half of this 20,000.
10,000.
And step 3, from original annual allowance, deduct this half. From 40 original amount, deduct 10. So what is the remaining annual allowance you can get?
30,000.
30. For 2021, only 30,000 annual allowance you will get. So it is tapered, right?
Yes, ma'am.
And third point, if AI mean adjusted income, is 312,000 or more, then annual allowance is reduced to at least 4,000. Means at least 4,000 you can get in any case. Just give me 1 second. So, for example, your adjusted income is 312,000. Step 1 says calculate excess above 240. So, in this example, what is excess?
72.
70.
2,000.
Make the half.
36,000.
And from original 40,000, when you deduct this half, 4,000 annual allowance you can get. Clear?
Yes, ma'am.
So this annual allowance for the tax year 2021 you can maximum get. Now, for example, your ANI is 330,000. So first step, take the difference and tell me the excess above 240.
90,000.
Divided by 245. And from
45.
original 40,000, when you deduct 45, your answer is negative and in 0. And maximum 4,000 you will get in any case. Maximum 4 you will get. Okay.
Yes, ma'am.
Mean when your when your adjusted income is 312 or more, then 4,000 at least in any case you will get. Clear?
Yes, ma'am.
That's it. Now, what is the formula of adjusted income? We already knew the formula of ANI, but now what is the formula of AI? Okay. AI. AI formula is net income. You know, net income mean before personal allowance, non-saving, saving, dividend, all three columns, total net income. Add employee contribution in OPP and add employer contribution in OPP plus PPC both. So employers both contribution, but employee only occupational pension plan contribution. You have to add, and then you will get the adjusted income, and then you will decide how much you will get the annual allowance for the tax year 2021. Clear?
Yes, ma'am.
Okay. Open your WhatsApp list of questions. So next question I want to read from this list is question number Mr. T. Mr. T question I am reading now.
Okay.
Mr. T has an employment income of 86,000. The following contributions were made in his pension plan. This one is pension plan. Please write down plan word. Number 1, employer contribution in personal pension plan 26,000. Mr. T contribution in occupational pension plan 22,000. Mr. T contribution in personal pension plan 13,000. He has made the following contributions in prior years. Following pension contributions in prior years. So can you please amend the tax years? I just want to write down here. So hello.
Hello.
Sorry, my daughter is making noise. Okay. So please write down the tax years. Uh, 18, 18, 19, 19, 20. Okay. So where 16, 17 mentioned, please make it 19, 20, 24,000 contribution. 18, 19, here 15, 16, and you will make it 18, 19, 16,000. And 14, 15 will be 17, 18, and you are not a member of registered pension plan. And you know, assume in this whole list, you are calculating the tax payable for the tax year 2021, right? So your requirement is calculate tax payable for which year? 2021. Always assume.
2021.
Okay, so have you done with these amendments?
Yes, ma'am.
Okay, so just forget about the annual allowance. What is how to apply annual allowance? Just forget about it. Do the question in normal manner and calculate the income tax liability. That's it. At the end, I will tell you how to apply annual allowance in the question. Okay. So
Yes, ma'am.
in normal way, we have to we will calculate the income tax liability. So firstly, we will calculate the employment income. What is salary in the question? 86,000. Then less employee contribution in OPP 22,000 and employer contribution in which plan he is contributing? Employer contributing in personal pension plan, PPC. And you know, it is exempt benefit for employee. So what is your employment income? 64,000. And you know, employment income will go to non-saving column. So employment income 64,000 less personal allowance 12,500. Why 12,500? Because you can check your employment income in net income in the question before personal allowance. It's your net income. It's below 1 lakh. So full personal allowance you will get. And your taxable income, how much?
51,500.
51,500.
51,500.
Next step. You will increase your basic and higher both bands by the gross amount of personal pension contribution of individual in employee. So what is the personal pension contribution of individual?
12,000 net.
Yes, net figure given. So 12,000 into 100 over 80. 12 or 13,000?
Sorry, 13,000. Sorry.
13 into 100 over 80 is equal to 16,250.
Is it not gross? Is it not gross already?
Examiner is silent, so assume it's not a gross figure, it's a net figure. If examiner will use the word gross, then it's okay. He's not using the word gross, so you have to gross it. So your basic band is up to 37,500, add 16,250. So what is your basic band now?
53,750.
750. And your all income is 51,500. So all income covered in the in the basic band. So apply 20% rate is equal to income tax liability.
10,300.
10,300. Okay. Question is complete. And we did not discuss about the annual allowance yet. Question is complete, but we didn't discuss the annual allowance yet. Now, when income tax liability came, then you will start a working, in this question working 2, you can say. You will check the annual allowance availability, right? Why you are checking the annual allowance? To check if excess pension contribution made or not. Excess pension contribution, to check excess pension contribution. You know, excess pension is considered your non-saving income, and you will calculate the income tax, and your income tax liability will be increased. Right now your income tax liability in the question is 10,300. It can be increased if you will get the excess pension contribution. So now, how to check the annual allowance? Your tax year is 2021. Now you will check whether full 40,000 available or it can be tapered. It depends on your ANI. If your ANI is less than equal to 200,000, then full 40 available. If your ANI is more than 200,000, then you will check the adjusted income and then you will decide, okay? Now in this question, tell me, ANI is more than 2 lakh or less than 2 lakh?
Less than.
Less than. So it means how much annual allowance you will get? Tax year 2021?
40,000.
Full 40 available.
40,000.
It will not be tapered. That's it. Now, last 3 years unused annual allowance on FIFO basis you can get. So if on FIFO basis, if you go back last 3 years, so first tax year is 17-18, right?
17-18. Yes, ma'am.
In 17-18, how much annual allowance you will get?
0.
0, because in this year you are not a member of registered pension plan, so 0 available. Second, 18-19. In 18-19, how much you are contributing? Sorry, how much annual allowance available?
24,000.
No, total annual allowance. 18-19, how much you can get annual allowance?
40,000.
40. And you know, from annual allowance, you will deduct all pensions which you and your employer made in tax year 18-19. All pensions in this tax year you will deduct. So, is there any pension contribution?
Yes.
How much?
Yes. 16,000.
16. So, what is unused annual allowance carried forward?
24,000.
So you will carry forward 24 annual allowance and add in the 2021 40,000. Now third year, 19-20. Total how much annual allowance available in this year? 40.
40,000.
Minus all pensions contributions which you and your employer made in this year.
24,000.
So what is unused annual allowance to be carried forward?
16,000.
16. And add in the 2021 annual allowance. Now total of 2021 annual allowance figure, tell me.
40,000.
40 in 2021 plus previous 3 years you can also get. So how much
80,000.
total? 80 total you will
80,000.
get. And from this 80, now deduct all pensions which you and your employer made in 2021. So in 2021, which pensions contributions made? Employee made 22,000 in OPP. Employer made 26,000.
26,000.
And individual gross
22,000.
figure.
And then 32. And 18,000.
Individual gross PPC 16,250. Always gross figure of individual PPC you will deduct. So in this question, excess, what is excess figure? Hello?
5750.
57, 50,000, 750.
15,750. 15,15.
Yes, 50,000.
15.
Okay, 15.
15. Yeah.
Is it excess annual allowance or pension?
Excess annual allowance.
Yes, and if excess annual allowance, it will be carried forward to the 21-22 tax year. You will add this figure in 21-22 annual allowance. Okay. But I am amending this question from here. For example, assume this figure is excess pension. I am assuming only. Okay. If this is excess pension contribution, then what to do? Then it will be considered as non-saving income. Then what to do? Then go to your below the income tax liability, add a line, excess pension contribution. How much? 15,750. Already in which band you are falling?
High.
But no, your basic band is up to
Basic.
53,750, your basic band. And how much is already consumed? 51,500 already consumed. How much is remaining basic band? How much is remaining?
2250. 2250.
2250. So out of 750, 2250 covered in the basic band, 20% rate is equal to, what is the liability, income tax liability?
450.
And how much amount falling in the higher band? 15,750 minus 2250.
13,500.
At the rate of 40%.
40%
is equal to
5,400.
400. And what is total income tax liability?
16,150.
That's it. Now it's clear?
Yes, ma'am.
Okay. So that is the concept of annual allowance. Done. Next topic is pension relief restriction. This topic you will apply on bands. You will increase your basic and higher band by which amount? Gross amount of personal pension contribution of whom? Whom personal pension contribution? Individual or employer? Employee.
Individual.
Yes. So this restriction, normally you will increase the basic and higher band by the gross amount of personal pension contribution of individual. But when this restriction will apply, then you will increase the basic and higher band by this diagram figure. The figure which you will get through this diagram, through this figure, you will increase the basic and higher band, not by the gross amount of PPC. Okay. So,
yes, ma'am.
So this diagram says, see the sketch. Band extend. You will extend the basic and higher band by lower of gross PPC, individual's gross PPC. Normally gross PPC you will extend the bands, but now lower of gross PPC and higher of 3,600 pound and relevant earnings. Relevant earning mean trading income, employment income, and furnished holiday letting income. These three are relevant earnings: trading income, employment income, and furnished holiday letting income. So choose the higher of figure, then right above, and choose the lower of, and then you will increase the basic and higher bands. But when you will apply this restriction in the question, please write down the hints. First hint is, if Number one hint. If relevant earning mean trading income, employment income, FHL income. If these three are relevant incomes, then other than these three, all other incomes are called which incomes? If these three are relevant, then other incomes are
Irrelevant.
irrelevant. Yes. So if irrelevant, number one hint, please write down. If irrelevant earnings are given in the question also, just like property income, dividend, right? And second hint, if personal pension contribution of individual is also given, then you will increase the basic and higher both bands by the lower of. Okay.
Yes, ma'am.
Okay. So now go to your list of questions. We can do a question on it. The last question of this list. Mr. Z has property income 37,000 and trading income 7,000. So first hint, irrelevant earning mean property income given. So first hint is here. He made a pension contribution of 12,000 in personal pension plan. And he has unused annual allowance of previous years of 26,000 and compute tax payable. So just forget about annual allowance. Firstly, we will do the question in normal way and calculate the income tax liability. And then at the end, we will check the annual allowance availability. Okay. Just like above.
Yes, ma'am.
So what is your non-saving income in the question? Non-saving column. So property income, non-saving income, 37,000. And the other employment income is also given. 7,000. What is your total income?
44,000.
Okay, less personal allowance. 12,500. And what is taxable income?
31,500.
31,500. Next, increase, apply the rates. But before applying the bands rates, you have to increase your basic and higher band by the, whether restriction will apply in the question or not. Yes, because irrelevant earning is given, property income, irrelevant earning given. That's why you will increase the basic and higher bands by lower of working one. Restriction apply. Lower of gross PPC. In this question, what is gross PPC? 12,000 into 100 over 80. So gross amount of PPC is 15,000. And higher of 3,600, and relevant earning in the question is employment income 7,000. Choose the higher of 7,000 right above. Now choose the lower of which is 7,000. So normally, we increase the band by 15,000, but now restriction apply and only from 7,000 you will increase the bands, right? So
Yes, ma'am.
this restriction will reduce the relief because now you are increasing the band by only 7,000, not 15. So your basic band 37,500, increase it by 7,000. So what is basic band now?
44,500.
and your all taxable income covered in the basic band. So taxable income 31,500 at the rate of 20% is equal to
6,300.
3300.
6,300.
6,300. Now, when income tax liability came, what is the last step? Working to annual allowance availability, you will check. For the tax year 2021, whether full 40,000 available or tapered, you will check the ANI. If ANI is less than equal to 2 lakh, then full 40 available. And in this question, your ANI, mean net income, is less than 2 lakh. So full 40 annual allowance available. Plus last 3 years
Yes,
unused annual allowance you can get. And in this question, last 3-year unused annual allowance 26,000 given already. So what is total 2021 annual allowance? 66,000
6,000.
less all pension contributions. In this question, only individual personal pension contribution is given. And you know, when restriction will apply, always 7,000 you will deduct, mean through which your basic and higher bands you are increasing. Through this figure you will deduct from here, not 15,000, only 7,000 restricted amount you will deduct of pension. Okay.
Yes, ma'am.
And then excess, in this question, excess annual allowance arise 59,000, and it will be carried forward to the next year. And if excess pension arise, then you will apply the band rates and increase the income tax liability, just like in previous question we did. Okay,
Yes, ma'am.
that's it. The last topic of this pension chapter is extraction from pension plan. You know, right now we just discussed all in your life you are contributing in the pension plan, but now it's your retirement age coming and you will extract the money from pension plan. So now retirement age is coming, right? So
Yes.
extraction from pension plan means you will get the money. So first point, extraction is not allowed up to 55 years of age. So what is retirement age? 55. So before 55 year you
55.
can't get the money. After 55 year age you are allowed to get the money pension. Second point, early extraction is allowed if death can be proved at earlier age, just like cancer. For example, if one person is suffering from cancer, a disease which you can't go through, so you can get the money before the 55 year of age, because the person is suffering from that kind of disease that he cannot live more long. So you can get the money before 55 years of age, right? Otherwise
Yes, ma'am.
normal pension retirement age is 55. Third point, extraction is of two types or kinds. You can get the pension in two forms. Number A, income extraction. You know, for income extraction, examiner will use the word pension income in the exam. And second, capital extraction. You know, capital extraction mean you will capital mean actual amount you will get from your pension plan, which all the for example you invest all of your life and then actual amount you are getting from the pension plan. And income extraction means all funds are still in the pension plan, but you will get income from that amount over the period of time. Okay. So now my question
Yes,
is, if
ma'am.
you get the income extraction or you capital extraction, what are the tax implications? So now we will discuss one by one. First, income extraction. pension income extraction, uh, always it's your non-saving income and non-saving rates you will apply. And now capital extraction up to 10,73,100, mean in your pension fund up to 10,73,100 is lifetime limit. And out of this 10,73,100, you can take lump sum. Lump sum mean in one go, 25% tax free. In 268, 275 tax free. Lump sum mean in one go, 265, 275 you will get lump sum and no tax, 0% tax apply. It's tax free figure. And remaining 75% you will get in the form of annuity. What is 1073100 into 75%? What is the answer?
Eight 04825.
And you will get this money in the form of annuity. Annuity mean, for example, over the period of 10 years. So same amount, equal amount you will get over the period of 10 years. That's called annuity. And lump sum mean in one go you will get. Annuity mean over the period of time equal amount you will get. So 10 years equal amount you will get. That's annuity meaning. Okay. And is taxed as non-saving income. So non-saving rates you will apply on it, I mean 20%, 40%, 45%. Next. And number 2 point, and above 10,73,100 if extracted as lump sum, I mean above 10,73,100 if you will take amount, any amount lump sum, then 55% tax apply. And if extract in the form of annuity, then 25% tax you will apply. But you will check this updated figure from your textbook. If you have 10,73,100 lifetime limits, you can check through your book whether this is correct figure. I'm not sure right now.
Okay, ma'am.
Okay, so please write down a question. I will tell you this whole concept. For example, Mr. J has capital in pension plan of 2 million pound. He wants to extract lump sum pension of 700,000. Lump sum, how much you want to get out of 2 million? 700,000. And your requirement is calculate tax. So, total 2 million funds you have in your pension plan. And out of 2 million, what is lifetime limit? 10,73,100. This is lifetime limit. And out of this money, how much you are allowed to take lump sum? 25%, which is equal to 268,275 pound. This amount you can take lump sum at the rate of 0%. So zero, what is tax? Zero tax.
0%.
And remaining 75% you can get in the form of annuity, on which you will pay basic band rate 20, 40, 45% tax. But my question here is, you are taking 700,000 lump sum. So how much tax you will pay on this 700,000? So you can see 268, 275 lump sum you can take out of this limit, 10 lakh 71, 100, 73, 100. And what is the remaining pension fund remaining in the plan out of 2 million? 2 million minus 10 lakh 73,100. What is the remaining pension funds you have still?
926,900.
900. Out of this money, now what remaining lump sum amount you can extract from this money? Lump sum. If you are taking total 7 lakh lump sum, then how much remaining amount you can extract from this fund? So 7 lakh minus 268, 275.
For 431,725.
This lump sum, and what tax you will pay? 25%. What is the tax?
107,931.
So total on this lump sum figure, 7 lakh. How much total tax on 7 lakh lump sum you will pay? 0 here and 107,931. So total tax on 700,000 lump sum figure, you will pay 107,931 tax on 7 lakh lump sum amount. And remaining out of 926, 900 remaining amount you will take in the form of annuity, and you will pay 50, how much tax? 55. 55% tax. So that is the concept. Okay.
Yes, ma'am.
So pension topic is completed now.